This video is sponsored by my Patreon. Use that link down below or go to stocksurfest.com/Patreon and join. You get all my buy, sells, call outs, morning videos, plus more. Now is the best time to join early in the month. It's actually the first of the month today. So join, check it out. And with that being said, let's get into the video. Alrighty guys, check it out. So we had a red day in the stock market today. The S&P 500 went down 0.75%. The Russell went down 0.5%. The Dow closed down 0.5% as well, as we had the Nasdaq go down about 0.75% as the VIX went down 2%, and we had gold and silver go up. Gold up 0.1% as we had silver go up about 0.8%. So we got to break down the markets in this video, talk about the Fed as well, because today is a very important day when it comes to the Fed. And of course, we got to break down some charts, some stocks, earnings, all that good stuff. So sit back, relax, and let's get into the video, guys. So look, like I said, markets went down today and the VIX went down today. Pretty much we were down all across the board, and it seems like we are slowly cooling off from that big push we had last week. You know, last week, SPY ended up running all the way to about 416, 417, and now today and yesterday, we've been trading in this little downwards channel, if you will, here on the 5-day, 5-minute. If I zoom in on SPY, you guys can see exactly what I'm talking about, right? This morning, we failed breaking out of the intraday high from yesterday, which yesterday's intraday high was 416.30. Today's morning high was right around 416. So we hit a lower high and we took the lows out from yesterday. The intraday low yesterday was 410. Today we got down to about 407 on SPY, which is not good. And we ultimately did break up over 412 right before the markets closed. But if you look on the intraday chart, literally in the last 5 minutes, guys, 5-10 minutes, the markets collapsed. SPY went from 412. Now it's at 409 in the aftermarket. It went down 0.6%, 0.5% in just 5-10 minutes. And if you guys take a look here on the 20-day chart, SPY is still above the 180 moving average. So that's one good thing for the bulls here, and that's right around $401, $402. I mean, we're well above that at this point. We're about $7-8 above it, which I guess it's not a huge amount above the 180 SMA, but nonetheless, we are above the 180 SMA now, and we did close above that 408 high from the middle of May, which is a good sign here for the bulls. But one thing we'll go over here in a second about the Federal Reserve, it might not be the best thing for the bulls here in the short term. And maybe for the next couple of months, next couple of quarters, we'll talk about it. But first, let's take a look at Triple Q. Triple Q is down, or it went down on the day today. And just like SPY on the 20-day chart, we are well above the 180 moving average, but we are slightly under the 50 moving average, and we closed right around the highs from the middle of May. The highs from the middle of May being around 305, 306. Look at where we closed, guys, right on 306 or at 306, right on the dot, right? So Triple Q, we got to see what it does here, 305, 306. If we break under, let's say 305, we might be going down to 295, 296, which is right by the 180 moving average. But if we start to get buyers above 313, which I'm still sticking to, we might fill the gap to 330, 325, 330. That is where the next leg up, if we do end up getting it, that's where it could get us. But like I said, with the Federal Reserve starting to wind down the balance sheet, it's going to be interesting moving forward here. So let's talk about that. So starting literally right now, guys, June 1st, the Federal Reserve is going to start unwinding their massive bloated old balance sheet by $47.5 billion per month up until September. And the way that's broken down is $30 billion for treasuries and $17.5 billion for mortgage-backed securities. So again, $47.5 billion per month up until September is what the Fed is, going to be unwinding, selling, in terms of their balance sheet, right? And the amount will then double to a combined $95 billion, putting the Fed on track to reduce its balance sheet by about $3 trillion over the next 3 years. And that's actually according to Fox Business. And that is assuming that they're going to be, reducing the balance sheet by $95 billion every single month starting September for the next 3 years, which, let's be honest, they're most likely not going to do that. How long is the tapering going to last? I don't think it's going to last 3 years. I think they're going to reverse course before that, but who am I to judge, guys? What do I know? I might be some crazy guy on YouTube after all, right? But come on, let's be honest. What do you guys think? Do you think they'll reverse course before the 3 years, or are they actually going to do this for 3 straight years? Let me know your thoughts. I think I know what most of you guys are going to end up saying. So what they're doing now, again, is they're increasing interest rates. We all know this, 50 basis point hikes. We're going to be getting these for the next couple of meetings at least. And in tandem with that, they are now reducing their balance sheet, right? In other words, they're flooding the markets with bonds. And if the Fed sells bonds, it decreases the money supply by removing cash from the economy in exchange for these bonds, right? And that's what we're doing right now, kind of as we're trying to, curb inflation, tighten the monetary policy. That is what we're doing. And they did the opposite when they were trying to stimulate the economy, right? It was literally the opposite. They cut interest rates and they were buying bonds, not selling bonds. They were buying bonds and making that balance sheet nice and bloated, right? And now it just has to come down, guys. It's time to smell the reality here, right? So that's what we're seeing right now, starting today, and it's gonna get funky, guys. And if you didn't know, the Fed's balance sheet consists mostly of bonds and other assets, obviously, that have been purchased. And this balance sheet has nearly doubled in size during the pandemic as the Fed bought up mortgage-backed securities and other treasuries in order to keep borrowing cheap. Because if they keep on buying and buying and buying, keeps rates low, boom, it stimulates or it incentivizes people to go out and borrow and, kind of keep the economy going, right? So that is what, in other words, has occurred. The balance sheet has exploded over the pandemic, and this is coming from this quote I'm about to read. Federal Chairman or Fed Governor Christopher Waller, and he said this on Monday. He said, although estimates are highly uncertain, using a variety of models and assumptions, the overall reduction in the balance sheet is estimated to be equivalent to a couple 25 basis point rate hikes, which is why I said, in tandem with actual rate hikes, the tapering of the balance sheet, it's kind of I don't want to say a super tool, because who knows, it might not work. It's not guaranteed that this is going to work, but it's kind of like the best effort that the Fed can do right now to actually fight inflation. Now, will they be successful? Who the heck knows? Will getting the Fed funds rate to 3%, 3.5%, will that be what it takes to curb inflation alongside of reducing the balance sheet by maybe $3 trillion, which I doubt they do. I doubt they do that over the next 3 years. Will this be enough? I don't know. But that is what we're doing right now, guys. That is what the Fed's doing right now, and I guess only time will tell if they actually succeed in doing so. So understand, right now, we're not heading in an environment where the Fed has our back, right? We're not seeing rate cuts. We're not getting buying of bonds to increase the balance sheet. We're getting the opposite. We're heading into a tightening cycle here. And that, historically speaking, is clearly not the best for stocks, as we've been in a pretty intense bear market recently, and it might not be done. If you guys saw my video earlier today, which I highly recommend you go watch, we covered the history. I mean, not the full in-depth history of bear market rallies, but we've covered how in the dot-com bubble, in the great financial crisis, right, we had many bear market rallies within the bear market, and they all ended up being traps, obviously, until we got to the bottom, which then that was not a trap, because it then recovered, and the markets did very well up until today. They're still up a ton from 2000 and obviously 2008 as well. So go check out that video, because what we're seeing right now, it very well could be a bear market rally. So what do you guys think? Let me know your thoughts in the comments. Smash that like button and subscribe if you haven't done so already. It really helps me out in the YouTube algorithm. And make sure to get your free stocks from Moo. You get 5 free stocks, each up to $2,500 with a $100 deposit. And the May promotion for that free share of Twitter ran out, but you guys can still get, again, up to 5 stocks, each up to $2,500 with a $100 deposit. And you could also get 6 free stocks from Webull with any amount, any deposit. Both of those, again, are linked down below. And with that being said, let's talk about some stocks. We have some earnings to break down, starting off with good old Gamestop, guys, which closed down a measly 2.7%, so a pretty dead day for Gamestop. And they reported, and they initially went up to about $134 a share. And mind you, they closed at $121. So the stock shot up $12-13 initially, or about 9-10% on EPS of negative $2.08 versus negative $1.45. So they missed EPS. And they beat on revenue, or shall I say, but they beat on revenue. $1.38 billion versus $1.32 billion estimated. So they missed EPS. Losses were wider than expected, but again, they beat on revenue. And I'm not necessarily seeing anything on guidance, or at least last I checked, I didn't see anything on guidance, and I'm still not seeing anything on guidance. It seems like it says here, keeps inventories higher to sidestep supply chain snags. Okay, that makes sense. Snags, I haven't heard that in a while, or ever, really. But it looks like they're keeping their inventory high, which I guess that makes sense. So what I've been saying for GameStop still stands, guys, even after they reported a wider loss than expected, right? This stock could catch fire any day, any minute of the day. It could be 3 o'clock. Markets are about to close in an hour. It could be 9:30 a.m. It could be 5 a.m. pre-market. This stock could catch fire at any point of the day. And for that reason, I have my alert set at 135, and I might put one at 150. In fact, I will put one at 150 right now. Mark is at or above $150 a share. We will see what this ends up doing, right? So Chewy, on the flip side, is one that I saw, and I'm like, holy freaking crap. I'm not getting my buying opportunity anytime soon, because this one reported numbers and it shot up 25% after the bell. And that's after going down 5% on the day. Look, we closed at $23. This is now at what? $28, and it was over $30 just about 30-40 minutes ago. So unbelievable move on Chewy, and they did pretty well. I'm not going to lie. They did pretty well. 2.43 billion of revenue is what they did for the quarter versus 2.42 billion estimated. They did EPS of 4 cents, which may be the surprise. I think, keyword there is think. Let me double check. What was the average revenue, or rather average EPS estimate was negative. So the analysts, according to Yahoo Finance, that is, they were expecting negative 13 cents. So it looks like they came in with a surprise profit. They beat revenue, and the guidance is pretty solid. They see Q2 revenue of 2.43 rather to 2.46 billion, and they see full year revenue of 10.2 to 10.4 billion. So pretty good report for Chewy. And if you guys watch my previous videos, I said I want this stock in the teens to initiate a position, because I looked at the numbers. The numbers are pretty good for the growth. Look at the price of sales. I think the stock is at a pretty decent bargain. Could it be an even better deal? Sure. Again, if it was at 15 to 17 bucks, that's where I think it'd be a good deal. So for now, since it's at almost 30 bucks, I'm not gonna touch it quite yet. But if we do end up getting a big dump in the markets, let's say we do have this bear market continue. It's just a bear market rally we're in right now. Let's say we get a big dump off. That might be my chance to pick up Chewy on the next big downside, or down leg, if that's what we end up getting. And look at Amazon, guys. It keeps on trucking along. It went up 1.2% on the day today, as we're getting closer and closer to that split, which is occurring in the next couple of days here. I think it goes through on Friday. I could be wrong. And then it's officially, it's going to be trading split adjusted on the 6th. I have to double check, but I'm pretty sure that's what's going down. And look at where we are now, $2,500, which is a big resistance for Amazon. It's right by the 180 SMA here on the 4-hour chart, as you guys can see. So for now, I'm going to just set my alert at 25.50, right by that moving average. I'm not I'm not going to just dive into Amazon all in before the split, because if we do get that dump in the markets, guys, if this ends up being a bear market rally, Amazon's probably going to get hit. It's probably going to get hit even if it does split. And that just rhymed, I just realized, which is, it was unintentional, guys, but we still rhymed. So I'm going to be watching it. Amazon's on the list, on the watch list for sure, as it's outperforming. It's been outperforming the markets over the past couple of days. And it's one worth watching. AI is another one, C3AI. They reported earnings, and this stock is collapsing. It is down almost $4 a share after the bell, or in other words, from $18, almost $19, all the way down to $14. It is down over 20%. Not too good. They did EPS of negative 55 cents with revenue of $72.3 million. So, yeah, I told you guys, this is very speculative. It's one of those stocks that I would not myself personally consider buying. It's too speculative for me. I don't know much about it as well, to be honest. I have to do a deeper dive, but yeah, it's just unprofitable. It's been downtrending, and with this report, it's continuing the downtrend. It slightly got above the moving averages a couple of days ago, but now we're looking like we want to take the lows out, or at least test the lows being around $13 to $13.50. That is not a good sign. And did you guys see HPQ today? HPQ went up 4%, and now we're actually breaking out of $38-39. In fact, we're above $40 now. We're now approaching that high from the beginning of April, right around 41-47. So I think if we take that point out, which my alert is right around 41, I might as well put it at 41.50. Let me replace the alert. 41.50. There we go. If we take that point out, I believe we will be at all-time highs. Let me double check. Let's see here. Will we be? Yeah. We're at all-time highs now. We're at all-time highs now, for the most part. Or we hit one at 41.47 a couple of weeks ago. If we take that point out, we'll be at fresh all-time highs, and I think we're honestly going to start breaking out into the mid-40s. That's my opinion here on HPQ. Caterpillar did very well today as well, I guess. It wasn't a great day, but considering the markets were red, Caterpillar went up 0.8%. Not too bad. $1.72. It closed above the 180 SMA on the 4-hour chart, well above the 50 SMA as well, and it seems like we're trading within this uptrending channel very clearly, right? So at this point, if we continue this momentum and break out of 225 or 223 to be more precise with you guys, which was that high, let's see here, from the beginning of May, if that point's able to break, and 225 is big as well. That was the high from the middle of March, early April. There could be a push, 235, 240, towards the top of the channel. That is what I'm seeing here on Caterpillar, which could give it anywhere from 5, 7, 8, 10% upside, obviously depending on where you get in. And as always, guys, I'm not a financial advisor. I'm not telling you what to do. You must always do your own research. That is very important. And one more, guys, one more for this video. If you stuck till the end, hit that like button and make sure to subscribe and let me know your thoughts in the comments. I appreciate you guys, as always, for watching the content, sticking on throughout. Without you, none of this will be possible, or would be possible. Seriously, it wouldn't. Just being honest, right, guys? I appreciate you all, as always. So the last one here is IBM, International Business Machine Corp. Look at this. It went up 0.4%, and what do you notice? We are now approaching 140 to 142, which literally we have not broken out of that at all over the past couple of months. Over the past almost year at this point, guys. No joke. 9 months we're talking. We have not gotten above 140, 142. So I'm thinking if IBM's able to clear 142, and mind you guys, we're getting some ascending triangle action here on the 4-hour chart. So if we get that breakout above 142, this could fill the gap to 147. If I pull up the 3-year chart, you guys will be able to see that 147 was the high from May of 2021, so about a year ago. That's where we're going, in my opinion. And then after that, if we break 147, 152 is next, which was that high from before the March 2020 crash. And I think that's the all-time high. Let me double check. Actually, no, 206 is the all-time high from back in 2013, almost a decade ago. So let's just say this to keep it simple. If 142 breaks, there's going to be a leg up, guys. Where is it going to go? Nobody knows, but I think a lot of bullish momentum will kick in there, and we shall see how it plays out. So with that being said, guys, I'll wrap the video up. I appreciate you all for watching. Make sure to join my Patreon if you haven't done so already. That's linked down below. Check it out. You get all my buy, sells, call outs, morning videos every single trading day, plus more. It's essentially a look into everything I'm doing in real time in the markets, and you could talk to me one-on-one throughout the day. That is linked down below, or you can go to stocksurfest.com/Patreon to join, and now's the best time to join, early in the month. And if you don't like it, you can simply cancel, and make sure to also get your 5 stocks from Moomoo linked down below with a $100 deposit, and you can get 6 stocks from Webull with any amount of money deposited. That's also linked down below. And with that being said, cheers, guys. I'll catch you all in the next video. Peace out.